If you're thinking about upsizing, most people focus on price, timing, and interest rates. But there is a much bigger risk most homeowners don't see coming. Your existing mortgage. I've seen upsizers lose flexibility, pay penalties they didn't expect, or miss out on the right home. Not because of price, but because of the fine print in the mortgage they already have. So in this video, I'm going to walk you through what actually happens to your current mortgage when you upsize, what features matter more than rate, what portable really means, and how blended mortgages work in real life, not brochure life. This is not theory. This is what actually plays out in Oakville, Burlington, and across the GTA market. Here's the biggest mistake upsizers make. They think, I'll just deal with the mortgage later. But your current mortgage terms will heavily influence whether you buy first or sell first, how much pressure you are under, and how expensive your transition becomes. When you got your mortgage originally, you were probably told, look how low this rate is. What most people weren't told is what happens if you move, what happens if you need flexibility, or what happens if your life changes. Upsizing exposes every weak clauses in your current mortgage. Let's clear up something because this is where most homeowners got misled. A low rate doesn't mean you have a good mortgage. In fact, some of the lowest rate mortgages on the market comes with the most restrictions. And here's the key. It's not about whether it's a bank or a monoline lender. It's about the specific mortgage product you signed, because every mortgage is a trade-off. If you push for the absolute lowest rate, you are often giving up something else in return. That something else could be limited portability, higher penalties if you break early, restrictions on refinancing, or reduced flexibility when your life changes. And this is where upsizers get caught, because when you bought your home, you weren't thinking about moving. Now you are, and suddenly those restrictions matter. Even with the big banks, especially their discount or online divisions, some products can have limitations. Same with monoline lenders. And oh, by the way, a monoline lender simply means a lender that only offers mortgages. They don't have branches or offer things like the checking account, but many of them are actually very competitive. There are excellent ones, there are flexible ones, and there are also very restrictive products. So the real lesson is this: you don't just choose a rate, you choose a contract with trade-offs built into it. And when you upsize, that contract gets tested. That rate you were proud of 2 years ago might be the exact thing costing you flexibility today. Let's talk about portability because the word gets abused. A portable mortgage means you can move your existing mortgage balance, rate, and term from your current home to your new home without paying a penalty. Sounds simple, right? Here's the catch. Portability usually requires your new home to close within a set time window, the new property to qualify under lender rules, your income, debt, and credit still requires qualification, and sometimes the new purchase price to be equal or higher. And here's the big one. Some mortgages say portable but do not allow blending, meaning you need more money for the upsize home. You can't simply add to it easily. That's where problems start. Most upsizers don't buy a new home for the same price. You usually need a bigger mortgage. This is where blended mortgages come in. A blended mortgage means you keep your existing mortgage portion, you add new funds to it at today's rate, and the lender blends the two into one new rate and aligns them under a term. This can be very powerful if it's allowed. But here's what people miss. Not all lenders blend. Some only blend internally. Some force you into a full refinance. Some reset penalties in sneaky ways. So if blending isn't allowed, your options become pay a penalty, break the mortgage, or lose the home you wanted. That's why upsizers need to understand this before making any offers. Here's how smart upsizers protect themselves. Before you list or buy, you confirm, is my mortgage portable? Yes or no. Can it be blended? Yes or no. What's my real penalty if I have to break it? What timelines does my lender require? And how does this affect buy first versus sell first? This is not a rate conversation. This is a strategy conversation. And this is where a coordinated plan between your realtor, your mortgage broker, and lender actually saves you money. Upsizing isn't just buying a bigger home. It's a financial transition. And your mortgage can either work with you or quietly work against you. And if you're thinking about upsizing in Oakville, Burlington, or anywhere in the GTA, the first step is simply having a conversation. You can reach out to me and I'll connect you with a superstar mortgage broker who understands upsizing strategy, portability, blended mortgages, and how to structure your move properly. Or we can start with a quick conversation. I can help you, guide you through the process myself. You can call or text me directly at 647-818-7373. If you prefer to book a time, there's a link in the description where you can schedule a one-on-one meeting. And if you're watching this on TV, just scan this QR code on the screen and it'll take you straight to my calendar. I'm Realtor Roshan and I would love to see you again on my next video.